Hello, welcome to the next video and the next unit. We will talk about the know in the market direction using the controlling side. One of the most important things in trading is to know the overall market direction on the higher time frame and combine this knowledge with the lower time frame. So if the 4-hour time frame moving in a bullish trend, creating highs and lows and respecting demand zones and breaking through supply zones, our overall main trend will be bullish. This trend will look like this on the 50-minute chart. On the first leg of the 4-hour, on the 50-minute, price will respect demand zones over and over again. And as soon as price reaches its high point and turning point, price will turn into bearish on the 15-minute chart, and it will respect supply zones over and over again. But as soon as price steps into the 4-hour demand zone, which is down here, this is the 4-hour demand zone on the 50-minute. So price steps into this zone on the 15-minute chart. We can expect some reversal point, and we will see demand trades over supply trades again. So price will create this second leg, and on this second leg, the 15-minute chart will create demand zones over and over again. And if price reaches its second turning point and reversal point, we will see supply trades over and over again over demand trades. Price steps into this second demand zone, which is down here. The second demand zone, the second 4-hour demand zone will look like this on the 50-minute. And if price steps into this zone on the 50-minute chart, we can expect a reversal point again, and we can expect demand trades over supply trades again. Okay, so that's a live example. As you can see, in this region, on the 4-hour, price is creating a series of higher highs and higher lows, creating demand zones and breaking through supply zones over and over again. So we will know that the overall direction is bullish. Okay, as you can see, I marked out the demand zones in this region. These demand zones created inefficient push to the upside, broke structure, and swept some liquidity. So these are valuable demand zones. As you can see on this demand zone, huge inefficient push came into the market, break of structure to the upside, and liquidity is free from this region and also from this region. We have this last demand zone here. As you can see, this was the last candle before the inefficient push to the upside and the break of structure and the liquidity sweep. So we will have this last 4-hour demand zone. We will expect some reaction on this zone. And after a tap of this zone, we can expect a reversal point, change of character, then the continuation of the overall trend. So let's switch to the 50-minute chart. And as you can see, this was the 4-hour zone that created the last 4-hour high. On the 50-minute, the pullback already started. We have the last candle. And let's see what happens. We can actually refine this zone on the 50-minute to this week here. Sorry, bear with me. So we can refine this zone to this week because this was the last unmitigated demand zone on the 15-minute chart before the inefficient push and the break of structure. All of the zones above this zone. So this one is mitigated by this candle. This one is mitigated by this candle. So this is the only unmitigated zone inside of the 4-hour POI. So we will use this zone as our refinement. This means we will know that if price steps into this 4-hour zone, we will expect the tap of this zone also, because all the unmitigated 15 zone inside of this zone is this one. Okay, so as you can see on the 15-minute chart, the structure looks like this, creating a series of higher highs and higher lows, creating demand zones over and over again. I will just move it here. You can see it's creating demand zones, respecting demand zones, and creating a series of higher highs and higher lows. On the 4-hour, this movement just simply looks like this. Let me just switch back to the 4-hour chart and you will see that. I will just remove these arrows. So as you can see, the 4-hour leg looks like this, just a straight upside candle or candles. Okay, but on the 50-minute, it is creating a series of higher highs and higher lows, demand zones, and breaking through supply zones. So as I said earlier, if price reaches its high point and the turning point, price will create a series of lower lows and lower highs and creating supply zones and breaking through demand zones on the 15-minute chart. But on the 4-hour chart, this pullback will look like just a simple leg into the 4-hour POI. Okay, so I will just play price forward. And you can see that price created series of lower lows and lower highs. I will just map the structure out again. As you can see, we have the high points, low points, and supply zones. So this is how this structure looks like on the 50-minute, creating supply zones over and over again, respecting those supply zones and breaking structures to the downside. I will switch back to the 4-hour and I will show you how does this look like. So as you can see on the 4-hour, it's just a simple one candle to the downside. And on the 4-hour, this is the structure. On the 50-minute, this is the structure. So you will know that the overall direction is still bullish because price respected this demand zone. As you can see, price almost tapped the down area, the less unmitigated 50-minute POI. It almost tapped that zone, so we will expect the tap of this zone. I will just play price forward again. See what happens. Okay, price is really, really close to this zone. And as you can see, the tap of this zone happened. We can also expect some liquidity sweep here because we have a bunch of liquidity in this area. And I will talk about liquidity sweeps in the next unit. Price has a great chance to sweep all of this liquidity before the reversal. So let's see what happens. Price swept the liquidity to downside, as you can see with this movement. And after a liquidity sweep and the mitigation of this 15-minute POI, this 15-minute demand zone, price reversed the price to the upside with change of character here. And as I said, after the 4-hour demand tap, we'll expect the same order flow, the bullish order flow on the 15-minute chart, so creating series of higher highs and higher lows. So let's play price forward again. As you can see, price is creating series of higher highs and higher lows. I will just map the structure out again. Highs, lows, highs, lows, highs, lows. And this is how the 50-minute structure looks like, creating highs and lows, creating demand zones over and over again, respecting demand zones and breaking through supply zones. But on the 4-hour chart, this 50-minute movement will look like just a simple leg. Let me just switch back to the 4-hour chart. So as you can see, on the 4-hour, this movement is just a simple leg. Okay, so let's see what happens if the 4-hour chart reaches its high point and reverse the overall trend. So as you can see in this region, price was moving in an uptrend, creating series of higher highs and higher lows, creating demand zones, breaking through supply zones. But after the high point has been reached, price reversed, and the 4-hour chart reversed the trend also. So from bullish, it turned into bearish, and the 4-hour chart turned into series of lower lows and lower highs, creating supply zones and breaking through demand zones. So creating supply zones, breaking through demand zones, as you can see. And if this happens, the 4-hour trend will change into bearish. So it will look like this. I will just mark the structure out again. So as you can see, it's creating a series of lower lows and lower highs. And the 50-minute structure will look like this. Because it's bearish, these are the 4-hour legs. This is one upside leg. This is one downside leg. This is one upside leg. This is one downside leg. And on the 50-minute chart, it will also look like on the upside legs, creating series of higher highs and higher lows. And on the downside leg, it will create series of lower lows and lower highs. And the main trend turned into bearish from bullish. So you will want to trade the countering side of the market again, which is bearish. So short trades are in control. It means supply is in control. Okay, let's combine more time frames together. So if the 4-hour structure and trend is bullish, it's creating series of higher highs, creating demand zones and breaking through supply zones. The 15-minute will look like this, as I said in the earlier video. So on the first leg of the 4-hour structure, the 15-minute will create series of higher highs and higher lows and demand zones. The second leg of the 4-hour, so the pullback phase, it will create lower lows and lower highs and supply zones. And the third leg, it will create a series of higher highs and higher lows again and demand zones. Okay, let's combine the 15-minute time frame and the 1-minute time frame together. So let's focus on the last leg of the 4-hour. So on the last leg of the 4-hour, it's bullish on the 15-minute, creating series of higher highs and higher lows. And let's focus on this region of the 15-minute chart. As you can see in this region, price created upside push, break of structure, inefficiency, and the demand zone. After a demand zone has been created, price came back to this zone and created a new high. On the 50-minute, it will look like just 3 simple legs. But on the 1 minute, it will create a series of higher highs and higher lows. And after the 15-minute high point has been reached, the 1 minute chart will reverse and it will create a series of lower lows and lower highs down to this 15-minute demand zone. And as soon as price taps this 15-minute demand zone, here and here, so this zone is the 15-minute zone drew on the 1 minute. So as soon as price taps this zone, we can expect some reversal, change of character to the upside, and the continuation of the original order flow, which is bullish. So this is what we call the expectational order flow. Okay, let's see how can we combine all of the time frames together and use them for our advantage. As I said, the 4 hour is bullish, creating highs and lows, creating demand zones and breaking through supply zones. So the main trend is bullish in this scenario. So this leg is the main trend, this leg is the counter trend. The main trend on the 15-minute will look like this, creating a series of higher highs and higher lows. And the counter trend will look like this, creating lower lows and lower highs until it taps into a 4 hour demand zone, and the 4 hour demand zone reverses the price for the main trend again. Okay, let's focus on this region of the main trend on the 15-minute. So price is creating demand zones over and over again. A new demand zone has been created here, and this demand zone broke structure to the upside with inefficient movement. This region, as I said, will look like this on the 1 minute chart, and we can expect the tap of this 15-minute zone. So this is the 15-minute zone on the 1 minute chart, and we can expect the tap of this zone. And after this zone has been tapped, we can expect the reaction and the reversal. So the continuation of the whole order flow, the whole bullish order flow. But before the zone tap happens, price will reverse on the 1 minute, and it will create a series of lower lows and lower highs down to this region. And after this region has been tapped, price will reverse the price and create a change of character. As I said, we'll talk about change of characters in the entry notes, create a change of character. And after the change of character happened, and it can happen in long trade because we know that the overall direction is bullish. So it's safe to enter a bull trade on the 1 minute chart, knowing the higher time frame direction. So let's see another scenario before we take a look at the live examples. So price is in a bullish trend again, creating highs and lows and creating demand zones. After this demand zone has been created after a break of structure and the inefficient movement, the 4 hour chart and the 4 hour price tapped into this zone and reversed the price and created a new high. This tap of the zone and this movement will look like this on the 15-minute chart. So the first upside leg, pro trend leg, will look like this on the 15-minute, and the second downtrend, so the counter trend leg, will look like this on the 15-minute chart, creating a series of lower lows and lower highs. Price tapped into this 4 hour demand zone. So this will be the 4 hour demand zone on the 15-minute chart. Price tapped into this zone, and after it broke through the last high point, did a change of character and tapped into this 15-minute demand zone and reversed the price. And this movement will be this leg. This movement will create a new high. Okay, let's break down this tap of the zone on the 1 minute chart. So after the 15-minute change of character and the 15-minute demand zone has been created, price tapped into this zone, and this upside movement will look like this on the 1 minute chart, and this downside movement will look like this on the 1 minute chart also, creating a series of lower lows and lower highs. So after the tap of this 15-minute zone happened, here also on the 1 minute, price will change character on the 1 minute also. So break through the last high point, change of character, it will create a demand zone. And after the change of character, you can mark your demand zone out, hop in a trade on this demand zone, so hop in a long trade. And you can write the expectational order flow, which is this one, because it's bullish in this case.